Hey guys, Boris again. Let's take a look at the commodity dollars for Aug 8 to Aug 12, 2016. Again, sorry I sound like a frog, but I'm going to try and do the best of it as I battle through this vicious little toddler-given virus. Why is it that toddlers always give you the absolutely most virulent viruses that you could possibly imagine? Anyways, guys, I think the commodity dollars are actually going to be the much more interesting trade this week. That's going to be the centerpiece of the market this week, especially with the Kiwi, because of course we have the RBNZ decision, and it's really a push between 25 basis point cut and a 50 basis point cut, or perhaps a 25 and another 25 in a month or so as they communicate that they really want to ease the policy. Aussie continues to be the high bid. This was an interesting story, and we talked about this last week. That even if RBA cuts, it wasn't the question whether RBA was cut. It was a question whether RBA was going to cut and then project another cut, which they didn't. And that, of course, made Aussie just buy the dip story all the way through. Because right now, as I said, the only trade in the market is the high yielders, which is the Aussie and the Kiwi. Now, what's interesting here, and this is something we should become cognizant of. I don't think it's going to be a factor just yet. But I do think if the market becomes more convinced that the Fed is on the way to seriously, actually, really hiking rates, even as little as 25 BPs in September, you will get a little bit of outflow out of Aussie and Kiwi because even though they still present a very, very fat interest rate differential, the spread between the new US rate and the old Aussie rate and the Kiwi rate is going to narrow. And I do think that they are kind of vulnerable here at the highs, certainly. But there may be another week's worth of juice left over in the commodity dollars, depending on how the U.S. story trades out. For now, the preeminent buy trade against the dollar is the high yielders, unless the RBNZ just completely destroys the value of the Kiwi by essentially communicating that they're going to cut. As far as Caddy goes, the loonie has just basically been a sideshow for a long time, and it's gotten weaker because oil prices have gotten weaker. We talked about the fact that oil just continues to drift lower, and I think it came into the 40s, almost touched the 40 level this week. And as the fact that it's petered out in the high 50s, now trading into the 40s, just puts a cap on any kind of a dollar CAD rally. We also had horrific data out of Canada as far as employment goes. There's just nothing really great going on in Canada because it is so sensitive to the petrodollar or to the petro economy, and therefore I think it continues to be an underperformer as we go forward. So let's take a look at the levels here that I think are interesting. They're tighter levels, but it still remains 75, 77 in the Aussie, resistance here at 77. Dollar CAD has kind of moved up. It's been my favorite buy to dip trade. It continues to be a good buy to dip trade, and it peaked up a little bit. 33.50 now becomes a new high point on the resistance. And Kiwi, I think this week is going to be phenomenally interesting. We're going to be talking about that in the crosses section because I think that's going to represent the most interesting cross trade possibilities for us. So we'll be watching that very, very carefully, especially if the RBNZ decides to just bash and destroy the yield in the Kiwi in order to get the currency back below the 70 basis points. So let's take a look at the charts here. And first, let's start with the Aussie. So I think the most interesting thing is that last week we said, buy the dip in the Aussie, and you had this dip, RBA cut, and it just came right back up. It was definitely good for quite a while. Now, however, we're essentially at a triple top 76.50. I think 77 sort of peaks out. I wonder if I think if we can go weekly, maybe 1 year, yeah. So it's really 78 that's the peak, but I think sort of the 77 level here becomes a big peak level for the Aussie. 75 still remains relatively decent support, and I think it's going to get relative strength here from the Kiwi as the week progresses. Dollar CAD, of course, and this is the weekly. I'm just sort of fooling around and showing you just how strong the uptrend has been in the weekly, and how every time it's sold off, it's been a great buy. One of the great things, one of the key things you want to watch for in a strong uptrend is higher lows, and that's exactly what you have. You never look at the highs, you always look at the lows in an uptrend. And in an uptrend, you see a series of higher lows, and that suggests that the dollar CAD remains pretty much a buy to dip story. Let's take a look at the daily charts and just get a little more granular here. So we ran up to 32. 32 still becomes a pretty decent resistance point. 33.50 I think is the high resistance point. But any rally, any decline in dollar CAD, any rally in Canadian dollar, certainly looks to me a pretty decent buy at the 130 level here. The further support here is 28.50. That's the hardcore support. If that breaks that support, I think that invalidates the upward trend basis. But for now, it's in a very clean, sweet upward trend, and every dip now becomes a rally. I mean, as a matter of fact, I'd be a buyer here at 31. If I get 31s, I'd be a buyer at 31 here, because I think there's a reasonable chance it goes to 32.50 as the week progresses. And then last but not least, this is going to be the marquee event. This is what we're all going to be watching, because of course this is the RBNZ rate. Notice, by the way, the failure here. We had the 73 is a failure right in front of that, so it's a triple top lower high fail. Friday's NFP numbers punished the Kiwi, which not a surprise. Again, remember I told you it's not the absolute yield, it's the relative differential that matters in the currency market. So certainly we're going to test. I mean, if RBNZ cuts, the 71 definitely goes by the wayside. The more interesting thing is I think it definitely tests the 70. This is the real support here. It's basically been a 73.70 trade in the Kiwi for a couple of months. And it all going to be contingent on just how aggressive the RBNZ is. If RBNZ comes out and says, hey, we're going to cut rates, then we're going to cut rates even more, or we're going to cut rates 50 basis points, and we're going to temper any of the bubble effects on the housing market through macroprudential tools, by raising our by raising the loan to value ratios, by basically forcing people to put down more money, so therefore they can use lower interest rates to finance larger properties. They will get this down. I think the RBNZ really wants to see the Kiwi below 70 into the 60s for competitive reasons, and they're going to get very aggressive at trying to take this down. So I want to be on the side of the central bank if they certainly communicate that, and I think 70 could probably be the initial test, and then once that goes, it's probably going to be 69. That's going to be the real first support level on the move. If for some reason, I mean, there's always a possibility, but we watch the central banks very carefully, and we watch that tone of their action. Their tone has been very dovish. So if for some reason they choose not to be dovish and they change their tune, yes, then I think we could get a big reversal and the 73s go. If 73s go to the upside, you want to get involved here, because it's going to squeeze higher. But that's a very small probability scenario. The much higher probability scenario is that we start to crash here to the downside and test the 70s as our first level, and ultimately probably test the 69s as the selling in the Kiwi is going to continue. This, if we get a 50 basis point cut or a threat of 25 BP today and 25 BP in a month, that will be enough to take us down, I think, into the 69 area. So watch that very carefully. That's going to be the marquee event this week. That's what we're all going to be trading. And now we're going to take a look at the crosses and see how we can trade that through the crosses as well.